Hey, everybody, and welcome back to another episode of Real Estate Tip Tuesday. Hello, Ryan.
Hello, Katie. Welcome back, everyone.
Yeah, so today, guys, Ryan and I want to talk about a real estate strategy that a lot of people hear about, but very few people truly understand. And that is buying a property subject to the existing mortgage. I'm Katie, an associate broker with Team EvoAZ at eXp Realty, and I am here with the very famous Ryan from Your Best Mortgage. Welcome.
Thank you, Katie.
This is one of the topics that can sound creative and even appealing in the right situation, but it's also something that buyers and sellers should be careful with. They should understand. So today, Ryan and I are going to break down what a subject to actually means, why people consider it, and what both sides should understand before getting anywhere near this type of deal. If you're finding value in these videos, guys, please click the follow or subscribe button on whatever platform you're listening or watching on. Like, share the information with people that you think need to hear it, and it really helps us get this value out in front of the people who do need it. So without further ado, Ryan, when somebody says that they are buying a property subject to the existing mortgage, what does that actually mean?
Yeah, it's really buying a house without even having to apply for a mortgage. It's no bank approval, no new loan, no rate shopping, just you taking over the payments of the loan that's already on the house. And you keep the seller's interest rate, and that's a real strategy. It's called the buying subject to, because really what you're doing is you're just buying the house at the current rates and you're taking it over. So it really helps, especially, if maybe that seller had a rate in the threes and, rates right now are in the mid sixes. So it's getting a lot of attention because of this. So subject to, it's really short for buying a property subject to the existing financing. So the deed transfers to you, you own the home, but the mortgage stays exactly where it is. Same loan, same rate, still in the seller's name. You're just making the payments, the ownership moves and the loan doesn't. So for example, let's just say a seller has a mortgage at 3% with $250,000 still owed. If you bought the home the normal way, you'd have to take out a brand new loan at today's rates, call it 6.5%. On $250,000, the difference is really in hundreds of dollars a month, every month for 30 years. But in the subject to deal, that leaves you that 3% loan in place. You take over the payments, you get the house, you inherit the cheap money. So that's a big gap between, like a 3 and maybe a 6.5. But for the buyer, the benefit's obvious. You get the below market rate,
Right.
different whole qualification process. But for the seller, it could really be like a lifeline, someone who needs to move fast, who maybe is falling behind, or who has maybe no equity and really can't cover agent fees or closing costs of a traditional sale. It could be a way to get them out from under the payment that they can't make. But there are risks, for sellers, your credit is now riding on the house you no longer own.
Right.
So if you have a buyer that stops paying, your credit could get wrecked, if they stop paying, and you're legally on the hook for it. And, because the loan still shows on your report, it could block you from qualifying for another home. Another risk, it's not a formal loan assumption. I know we've talked about that on Tip Tuesdays before,
Mm-hmm.
in an assumption, the lender approves the buyer and releases the seller, and the buyer completely takes over the mortgage. And subject to, none of that happens. There's no lender, no blessing, no release. The seller stays tied to the loan indefinitely. And just like assumptions, one big hangup is the difference between the market price of the home and the actual amount of the mortgage. If your current loan is $250, but the home is worth $450, a lot of times the seller will want that extra $250 or $200 in this case. So the buyer would need to put a large amount down, or get a high interest rate second mortgage, which may erase the benefits of the subject to mortgage in the first place. So there's a lot to consider. It is available. There's risk to the buyer, to the seller. There's some hurdles to make sure the seller's getting really their equity when they sell the house. So it's not used often, but in certain cases, it could be a good option for a buyer and seller.
Interesting. And now, do most mortgage guidelines accept this? Are they okay with it?
Yeah, because it's completely, void of a lender. Really, what it is, they're just taking over. You just work with the title company and you deed the house into the new buyer's name, and they just actually start paying on the mortgage. It stays there, so nothing needs to be done on the mortgage side. They just take over the payments because they own the home now.
Got it. So like due on sale clause is not going to come into play here.
Correct. That's correct.
Okay. Okay. I know that is a question. I actually saw a post. Guys, we get a lot of our content from you, from our audience. And so I saw a post with somebody that was asking about this. And that was one of the questions was, does the due on sale kick in?
Yeah, absolutely. And that's one thing that if the seller would have to look, actually, they do need to talk to their current lender just to be sure. Most of them would be okay with it, but some could actually have an issue with transferring ownership to a new person. So that's a good point, Katie. But yeah, most of them, if you talk to your lender beforehand, they'll be okay with it. But if not, that could be something that holds you up as well.
Awesome. Thank you so much for clearing all of that up for us, Ryan. Hopefully it makes a little bit more sense for you guys out there. And if you'd like to check out any of our previous episodes, before we hopped on the show today, we joked that we've been doing this for like 5 years.
Yep.
So there's a lot of tips. If you want to check out any of our previous episodes, hop on over to our YouTube channel. It is at Team EvoAZ. That's our handle. Scroll down just a little ways. You will see the Real Estate Tip Tuesday playlist. That's where we live, or on your favorite podcast platform. Do a quick search for Arizona Real Estate Radio, and there you will find us as well. Thank you so much, guys. We'll see you next week. Bye.
Thanks, everyone.
Looking for the right home loan can be overwhelming, but it doesn't have to be. Hi, I'm Ryan Gilliam, an Arizona native with 20 years of experience helping families find the best mortgage solution for their needs. Whether you're a first-time home buyer or refinancing, I make the process simple, stress-free, and tailored just for you. I help you access better rates, offer guidance tailored to your goals, and make the mortgage approval process easier every step of the way. Your best mortgage starts with the right partner. Let's make your home goals happen. Reach out today.